So overnight, we saw this $200 million hack of yet another cross-chain bridge. Can you explain what happened here?
This hack is different from the recent hacks that happened to Ronin Network and the Horizon Bridge. It is a smart contract enabled hack, so there wasn't any private key leakage as it was in the previous two cases. So, in that hack, almost $200 million was stolen. And the issue was with the protest function in one of their smart contracts. Basically, that function, all of what it does is check if the request for withdrawal on the other side of the bridge, in this case on Ethereum, is valid. And there was a logical issue within that function that basically allowed any message, especially constructed, to pass that verification. And basically, hackers managed to exploit that, draining the funds. But what's also interesting is when the news broke out of the issue, that issue was very easy replicable by any other actors, meaning that any other people that saw the original hackers transaction could take the inputs of that transaction to that function, change the parameters so not the hacker's address but their own address will be rewarded with the funds, and they could rebroadcast that transaction. And that's why so many people were participating in that hack.
So in this most recent breach, it basically had to do with multiple actors exploiting bad code, essentially. But with Ronin, and then before that with Wormhole, it's my understanding that it was more of a centralized force breaching the system.
So with the wormhole, there was also an logical issue within the code itself. Basically, they were using a deprecated library from Rust that basically allowed anybody to upload their own set of validators that accepted the outgoing transactions. But with the Ronin and Horizon Bridge, the issue was that private keys of the validators itself were stolen by the Lazarus group from North Korea. And that meant that anybody controlling the majority of the multisig wallet that control the admin functions of those two bridges were able to call any function. And in case of Ronin Bridge, they were able to drain almost $625 million. And in case of Horizon Bridge, they were able to steal $100 million.
So let's broaden this out. For somebody who doesn't understand perhaps the nuances of what went wrong in the code, let's talk about the significance of these kinds of breaches. Just how bad is it?
We need to understand that in the Web2 world, when there was a hack, that hack almost never had a monetary price stick to it. Yes, there was a lot of leak of our data, but that data later on were sold on some darknet market, and it was really hard to put a price on that. But in case of Web3 hacks, it's really easy to put a price on that because we are dealing with money. And bridges, in general, are connecting two different blockchain networks, like, for example, Ethereum and Solana. When you're having one asset on one network and you suddenly see that, yes, there's another awesome application on totally different network, I would like to move my assets from Ethereum, for example, to Solana or vice versa, and have my assets there and be able to participate in that new DeFi application on the other chain. And how we can do that? We cannot simply move those assets. That's why we need blockchain bridges. They usually hold tremendous amounts of money, and those amounts of money and how much traffic goes through bridges are very enticing point of attack for black hats.
So it seems like there's this conundrum, right? In a multi-chain future, you need to have ways to bridge across these different blockchains, yet there are these very vulnerable touch points in the crypto ecosystem. So what's the next step? What do you do? Is there a way to better fortify these bridges?
Yes and no. Yes, because everything is a software, and software can have bugs. But if we put a lot of effort into verifying, auditing code that the project has run, there is a really big chance to eliminate most of the bugs. Another way is for developers to actually be on the cutting edge of the security in Web3, knowing what types of attack they can expect when running, for example, a lending protocol or a bridge in this case, because certain project types have their own specific use cases and potential attack points that if a developer is security focused can actually harden those parts of the code. uh, in a standard DeFi application, there isn't that much attack vector compared to a bridge, because in such a DeFi application, in a dApp, we have a website, we have a wallet, and we have a smart contracts. In Bridge, we have all of that, plus we have some centralized nodes, event listeners, listening to what's happening on one chain and another. You're basically duplicating the amount of code on from one chain to another, because you also need to have a smart contract on both chains that holds assets. So that's twice the attack surface of the standard DeFi application. So yes, developers need to be a security focus. They need to audit the code. Apart from that, from the audit itself, it's really good to having a bug bounty programs hosted, for example, like on Immunefi, because then the hackers, the white hats, as we call them, are incentivized to look for security vulnerabilities and report them back to the project, so the project can fix them and pay the reward to the white hats.
Now, it's my understanding that not all bridges are made equal, and there are some that are more vulnerable than others. Which are the ones that are most at risk?
It's really hard to tell because there isn't any standard that blockchain bridges can follow. For example, with different automated market makers, basically decentralized exchanges, there is a certain way how you can accomplish that. And most of DEXs are following that route because it was battle tested and we know what we can expect from that design. In case of bridges, every bridge is built differently. And every bridge also somehow inherits the security of the chain that they are built onto, meaning that if you have one side of a chain on Ethereum and another side of the blockchain bridge, for example on Near or Solana, and those smart contracts are built in a different programming language, which can be better than Solidity or not. It all depends. So there isn't a definitive answer which blockchain bridges are better than the other, which ones are safer than the others, because it all depends.
Now, you mentioned the fact that oftentimes the bridges that have more crypto cash associated with them tend to be bigger targets. Is there one that we should be looking out for that is particularly susceptible to hacks?
I mean, at the moment, I think every bridge should be careful because we've seen, especially this year, that they've been a major attack points on them. And for example, looking at Wormhole, yes, they were hacked in March for $323 million. But on the other hand, in April, one of the hackers found a critical vulnerability, reported to them, and they secured over 850 million dollars. So it's a scale. At one hand, they lost a lot of money, but on the other hand, through the bug bounties, they managed to secure a lot of more. And we've seen the same case with the Aurora. We've seen the same case with the Polygon, because they managed to patch few critical vulnerabilities because of the white hats reporting bugs to them.